What's good, everybody? This is the first video of 2021. As promised, some of you have been asking for me to share what it is that I do. So here it is. What I want to do, I want to talk to you guys about options trading in a practical sense. But first and foremost, let me say that I am not an investment advisor. I am not a professional money manager. I am simply someone who trades his own money in the pursuit of a financial gain. And these videos are for informational purposes only. I am not advising you to buy a stock, option, or anything. This is strictly for learning purposes or just information that I'm sharing. So with that being said, let's get into it. First, let me explain to you what an option is. Options are contracts that gives someone the right, but not the obligation, to buy or sell a stock at a certain price within a certain amount of time. That is what the textbooks would tell you options are, and they are. But what options are to me, in a practical sense, in terms of what I do with them, and what a lot of traders do with them, is they are contracts that you can buy or sell betting on a stock's price. So, for instance, Twitter. If you think Twitter is going to go down, you can buy what is called a put contract. And when Twitter goes down, the value of the contract goes up. Vice versa. If you think Twitter is going to go up to a certain price, there is a contract that you can buy, which is called a call contract, that will appreciate in value. It will go up in value when Twitter goes up. So you have the stock with its own price, and then you have the call contract or the option contract, be it put or call, with its own price. Over here, these are the strike prices. What the strike price is, it's where people are betting the stock is going to go. Now, say for instance, look, when you see my arrow here, this is Thursday's price action on Twitter. When I touch on this bar, this represents 1 day of trading, which was Thursday. Now, if you look, when I touch on it and you see the price, you see it says 68.56. That's the price that Twitter closed at on Thursday. Now, say for instance, you believe Twitter is going to go up the next day, which is Friday. And let's just say, hypothetically, if it's at 68.56, you think Twitter's going to go up to 70 or above. You're betting. If you're looking at this call contract, remember, calls mean you're betting for it to go up. Puts mean you're betting for it to go down. So, if you purchase this contract, this 70 strike call option, what you're betting on is that Twitter will be at $70 or more by Friday's expiration, by the close of Friday. Now, let's see what the price is. All right. On Thursday, you see that? 0.38. Now, let me explain to you this. Any of these prices here, these are the prices of the option contract. You have to times this by 100 because every option represents 100 shares of a stock. So if it says 193 here, it's actually $193. If it says 0.05 here, it's actually $5. This contract is $5. If it says 3.80, you times it by 100, it's $380. The same for puts as well. You times these numbers by $100 because they each contract represents 100 shares. Now, on Thursday, this is the option. This is the 70 call option. You see where it says 0.38? That's where it closed at on Thursday. So it closed at $38 on Thursday. The next day, it closed at $193. But you can see it has the high. It hit a high of $315. So if you would have bought one contract at $38, you would have seen a 408% return based on Twitter going up 4.5%, almost 5%. So a 5% move would have given you a 408% return on your investment, on what you had at risk. That's what you call leverage. And there's a lot of leverage in options trading. So a small amount of money, $38 is all you would have had at risk to make this type of gain. And Twitter that day went from 68.56 to close at 71.90. A lot of leverage. Let's look at another example. Let's look at the downside of it. Let's say you was betting this stock is Palantir Technologies, PLTR. Now mind, these are all the stocks that I track on a day-to-day basis. This stock on Thursday closed at $33.11. Let's look at, let's go to another example. Dash closed at 213.26. You see that? And let's say you wanted to speculate or bet. You wanted to bet, because that's what this is. This is betting. We are betting. We are not investing. We are betting. We are betting on the short-term movement of stocks. Now, say you wanted to bet. Let's buy the 207.50. The 207.50 contract. $126. So on Thursday, this contract was $126. And based on an almost 5% down move, because remember, we betting on the down, we buying puts. So it goes from 126, closes at 450, hits a high of $500. You could sell this contract any time before expiration. So if the next day, let's look, matter of fact, let's look at and see. This is a 30-minute chart on Friday. At the open, 10 a.m., it opened at 120. It hit $200 at 11 a.m. Then it traded back down. And then it closed at 450. So it hit $500 in the final half hour of trading. This is a 30-minute chart. Every bar represents 30 minutes of trading on Friday. I did that just to see if you could have got out early or midday or at the end. So you would have held this position towards the end of the day. But you got to get out of it before the close. If not, you're going to get exercised. And I'll get into a lot of that in later videos, explaining that in detail. But I just wanted to give you this introductory video explaining what options are about. These are contracts, people. These are contracts that you buy and sell, speculating on the stock's movement, be it up or down. This is DraftKings. DraftKings was at 59.19 on Thursday. went up 3%. Took the options calls up 116, 93%. You could have pretty much doubled your money. Let's look at a very, very, very extreme move. Tilray. Now, I made money on Tilray last week by selling some of the shares that I owned on Tilray, and I made a nice profit on that, which I'll get into that later. But let's just look at Tilray. On last Friday, on the 5th, Tilray was at $25.72. All right, let's look at it. Remember, it closed at $25. Let's look at the 30. This is betting that Tilray will go to $30 or better by Friday's expiration. Let's look to see what the option did. That option was $62. Again, when I click on the bar, 0.62 times it by 100, that's $62. So on one contract, you would have bought one contract for $62. Let's look what it did after that. On Monday, it closed at $194. On Tuesday, it closed at $1,200, $1,245. On Wednesday, it closed at $3,380. So in 3 days, that option went from $62 to $3,300. This is the type of leverage that options allow, or options give you. It gives you the ability to use a small amount of money to make a lot of money for a small, well, in this case, this was a huge price move in Tilray. But these moves happen. Tilray, $148% move. Now these moves don't happen every day, but they do happen. The key is to be in them when they do happen. I was fortunate enough to be in some of the shares of this. Wasn't in the options, but I made a nice profit on some shares that I had in Tilray. But again, that 30 strike, remember, it closed at $25 on Friday. Look, $25.72 is where it closed. So if you're buying the 30 call, because calls mean you're betting that it's going up, you're betting that it's going to go up $5 by expiration. But it went way above that. But again, focus on what you had at risk. You only had $62 at risk. $62 at risk. And with a little bit of patience, the $1,200 would have been a handsome profit. But to get that $33.80, geez, those are the type of returns that options provide if you're in them. Like I said, they don't happen every day, but they do happen. And the key is to be in them when they do happen. So I'm gonna get into a lot more in later videos. This is just like an introductory video. I'm gonna be doing videos weekly and explaining the trades that I did for that week, so you guys will see the wins, the losses. You'll see the rewards and risk into options trading in this account. So you'll be seeing live numbers. You'll be seeing my P&Ls showing you what this is all about. So I hope you guys understood or understand, some of the stuff that I just said in this video. If you have any questions, just let me know. And with that, till next time.